And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on.
Good morning, my futures family. Welcome to the market prep for Friday, April the 28th. My name is John Hoagland. Thank you for trusting me with your time. As always, our focus is on accurate context, good risk management, and always remaining patient in our trading. The economic numbers this morning, the core PCE price index, month over month, was 1.3%. They were expecting 1.3%, 0.3%, was 0.3%, and it came out 0.3%. A little bit of something that one site is talking about, and I'm not really seeing it, was the year over year. So where is it? Well, it was the PCE price index. February, it was 5.1%. March, 4.2%. So perhaps a little bit of easing of inflation. We know the talking feds are going to be looking at all of this. As far as the other numbers this morning, personal income and spending, both 0.1% higher than expected. Employment cost index also 0.1% higher than expected. We're still awaiting the Chicago PMI numbers as well as the Michigan consumer sentiment numbers. Probably not all that impactful, but we do never know what these markets are going to do. Not a big reaction in the early releases here today, so we'll take a look at what we're seeing in the charts here, and we'll see what's going on. We've got U.S. stock indices lower this morning after a pretty big up day yesterday. And there was a huge list of earnings yesterday. Of course, we all know that. This morning's earnings, well, yesterday Amazon beat expectations, but warns about April sales by Amazon AWS, Amazon Web Services. Intel beats expectations, predicts better margins in the second half. Exxon, Mobil, and Sony, the big ones out already this morning, all beating expectations on both categories. Crude prices remain choppy and still kind of accepting that late spike from Wednesday on potential slower global economic activity. That specter still looms there. One-on-one coaching. Make sure if you are struggling, if you want to talk to somebody, they're available. If you're in the trading combine for free, check it out on the website. Let me know how your session goes. Always, we had some good feedback yesterday, and the coaches were very excited to see that. So let them know how much you appreciate them, or if there's something else that they can be doing, of course. One kind of comment just to put in your head for Monday. Monday is May 1st. It seems like most of the rest of the world will be off on Monday. It's an Asian holiday, it's a European holiday, and there's an Asian holiday Wednesday through Friday also. So there may be some smaller some participation that may be a little bit lower next week, and we all know that Wednesday is the FOMC meeting. So just keep that in mind as you think about the liquidity and the things that you're going to be trading next week. The VIX this morning is up just a little bit, 1717. It was 1793 yesterday at this time. The dollar index up pretty good here this morning, 102.06 last I checked, 101.52 at this time yesterday. And the yield on the 10-year pretty much steady, 3.46% this morning, 3.47% yesterday. So no big changes there. Of course, FOMC next Wednesday. Traders and investors alike will be positioning themselves to protect against any volatility or big moves next week. Make sure that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on The Market Prep. Subscribe to our YouTube channel so you get notified when we do go live. It's always a pleasure to be with everybody. Scott saw and he conquered today. First in the room winning the prize. Good morning, Shaw, Stephen, Dan, Brian, Rooster, my brother Rick, love you, buddy. Alejandro, good morning, Bill, Rusty Golfer, Yarich, Jason, George, good morning. The center of the universe says good morning to all of you as well. Bear goes long, George Duque, good morning. Anissa, good morning. Dimitar, Don, Philo, Beto. All right, turn, Clyde. Andy Bleed, Hegel Matters, good morning. Trading for Animals, Travis, good morning. Shane, Taurus, Dude, NASDAQ, German. Where's Sarah? No Sarah Hall this morning. Good morning, Vlad. Good morning, German. Good morning, Sam, Julian. Happy Friday, everyone. No recap, April. No, I did not get the chance to do a recap. I've been a little bit lax. I've been a little bit busy at the end of the day, and I do apologize. If that's something you guys really want me to continue, just let me know. You can always tell me here. Diggable Seeker, you can always email me at jhoagland@topstep.com. It's something we were thinking about phasing out, but if you do enjoy it and we want to do it, I have no problem. I enjoy spending time with traders and talking trading. Okay. What a move yesterday to the upside. Yesterday morning, we talked about how the auction to the downside was really not doing well. I gave it a D. Yesterday morning, the downside auction, we gave it a D. So that tells us that the downside auction isn't doing very well. And sometimes when we have a downside move that doesn't perform well, the opposite move can sometimes be wicked and vicious. And I would call yesterday's rally wicked and vicious. We were kind of looking at shorts and make Hoag money. I don't know why. I found myself thinking short as well. But with the D on the downside auction, I was like, why am I thinking short here? And then Joe D said something near the end of the Make Hoag Money session yesterday. He said, it looks like there is a lot of liquidity up above this market. There's a lot of business to do up there, and that's exactly what happened yesterday. So Joe D, if you are here and you are listening, thank you, because you just kind of reinforced kind of something I was already thinking. You kept me from getting into trouble yesterday, and that was excellent. That was great. I hope that you guys all killed it yesterday on that rally. I took a little bites here and there, but I did not feel that I was seeing something that I was believing. Does that make sense? I was having a hard time believing that the rally would be that strong. And boy, it certainly was. It certainly was. Okay, you guys like the recaps. All right. Well, next week, recaps. Reflections, we call it. Reflections. Go Joe, right, Taurus? No, there was a great comment, and it just was enough to tip me over, because most of the time, I'm a kind of contrarian. I'm always, as Greg says, trying to be the innovator. I'm looking for the extremes. I'm looking to fade extremes with cheap opportunities. But when a market is like it was yesterday, There is no upper extreme. It's only pain to the upside if you're looking for shorts. And I've been in that seat enough times to know you cannot fight a market like that. You don't step in front of a freight train. You either watch or you try and find a way in. It was difficult. It's always difficult, at least for me, to try and get into a move that's already strong and underway. The market has a tendency to try and keep me out. Now, I got my way in a couple of times, had a couple of decent trades. I'm happy with that. What I'm really happy about is that I didn't get my heels in the dirt and say, I am going to pick the top on this, because it just never came. It just never came. And I think that's one of the things that retail traders, that newer traders, even professional traders find themselves saying, well, if I can't buy it, I have to sell it. And that's one of the things that, that traders tell me all the time is, I always feel like I have to be in the market. I always feel like I have to be trading. And you don't. You don't fall into that idea that, well, if I'm a trader, I damn well better be trading. I better be in the market. You can't make money if you're not in the market, but you can't lose money either. So if you're, not believing what the market is telling you, which was me yesterday, I'll flat out tell you 100%, I didn't believe that rally. So, finding ways to get into that and finding opportunities to take profits, to me was a win yesterday. And again, I didn't try and step into it. I didn't try and pick the top. I was tempted many times, but I've been in that seat before where it goes higher. Okay, this is the high, you sell it. You think it's cheap. Maybe it is cheap, but you get stopped out. It goes a little higher. You go, okay, this has to be it. I got a level here. This looks like a good spot. You short it, you get stopped out. Oh, it keeps going higher. Well, I got another level here. Maybe this is going to be the top. So you take the short and you take the stop. You get stopped out, stopped out, stopped out, stopped out, stopped out, stopped out. And then you start thinking, well, if I'm going to start buying it now, I'm sure I'm going to pay the high. So you continue to try and start selling it. It's much easier to sell a market that's coming to you. It's harder to catch a market that's moving away from you, but it's the right thing to do on a day like yesterday. I mean, it one time framed higher from 9:30 all the rest of the day. And then the NASDAQ, it one time framed higher all day. Don't fight trades like that. Don't fight markets like that. Even if you don't believe it, don't believe it by keeping your hand in your pocket, by keeping your money in your pocket and not fighting it. Oh, it was exhausting yesterday. At the end of the day yesterday, I sat back in my chair. I was like, oh, God, that was just... And I like when the market goes higher. I usually will catch good pieces of those. And we called it yesterday a little bit just by saying, that auction to the downside looked like garbage. Was not bringing in business. It was not bringing in new open interest. It was not bringing in volume. It just was a terrible break. And then that Wednesday excess on the daily chart, on the daily bar, the lack of, it just piled up at the bottom there. Like, this thing is just not doing well to the downside. We should have been looking for opportunities to buy it. Forgive me if you were in make hog money and were, always thinking about being the contrarian. We kind of opened range, kind of chopped around a little bit. Didn't even seem like that rally was that strong. It just kind of grinded higher and grinded higher and grinded higher. I guess the news that came out yesterday was viewed as good news, positive news for the markets. What Joe was talking about, just saying there's a lot of liquidity up there. There's probably a lot of pain up there. That was one thing that said to me, okay, you know what? I am not going to be the contrarian today. Was already thinking it before the open, make hog money. We got a little twisted around, I guess. I don't know. I don't know what it is. But Henry was at Dalton's Primer. Yeah, well, he was wrong. For a way, I was wrong yesterday. I even said it. The downside auction looks like it's suffering. It's tired. It's gonna end soon. And boy, did it end soon. Wow, what a big move. NASDAQ took it right up to the weekly kickoff high from that low. Unbelievable. Unbelievable markets. And you gotta believe it. You gotta trade what you see. We saw the market, the downside suffering, and I even have it right here on my little notes. There it is. Downside. I don't know if you can see it there. There's the D. There's the D that we gave the downside auction yesterday morning. We could have been somebody yesterday. I could have been a contender. But at least we made a little bit. At least we made some. And we didn't fight it. I'm taking my deep breath early. Let's jump into the charts. Enough of my pontification there. Nobody knows what's going on. Nobody knows where the market's going to go. It's all in probabilities. And the probabilities yesterday with that weak downside auction was a pullback. And what a pullback it was. Again, Joe, appreciate you. So, weak downside auction meets vicious rally. Anybody see the magnitude possible yesterday? I mean, we had excess at weekly kickoff low. Anything is possible. I would be looking for a move like this over a couple of days, not over one day. I mean, this is the biggest up move we've seen in quite a while. Back in March, maybe. And we called this excess low as well. So, well, what does it mean for us today? Well, yesterday, volume wasn't all that great. The New York Stock Exchange volume, where is it? Was 3.7 billion. It was higher the day before, even on the day that the market showed us that the auction wasn't doing well. So we actually pulled volume back on this move. We added 12,000 estimated open interest yesterday. Is that a big number for a move of that magnitude? Speculators were back in range. We're back in value. We saw that excess on the daily. The move to the downside wasn't doing well. We could have easily accepted below weekly kickoff low and then continue to move to the downside, but that's not what happened. We rejected this excess on the daily chart here and pow. So back to previous balance, back to probably some postulating and hedging for the FOMC next Wednesday. Today is another day. That's right. Here, take a look at the 30-minute chart. So we've had some news come out. We've had some economic news looking kind of friendly towards that. This purple line here is last week's low. Was supportive, broke, rejection below weekly kickoff low, driving back above last week's low, and finding support there in the overnight. Overnight inventory was a little bit to the short side. It's being reconciled already. So we're inside range, we're inside value, gentle or a kind of mild support level here with last week's low. Inside value, I got to stay patient. When you see this profile, I mean, look at this. The market opens, looks lower, rejects. The initial balance is the low of the session. We get a little bit of a consolidation here, 839, 930. We actually left a short on. We didn't quite get to our profit target, and then we got stopped out. That was the end of the make-home money yesterday. So kind of a tough day. That's okay. I know over time we're going to make money with this. But then the market one time frames higher, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high. It never stopped until the very end of the day. Don't fight markets like that. And there were plenty of levels for us to look at for potential shorts. Oh, it's going to hit this point of control. Oh, maybe last week's low. No. What about this point of control? No. What about value high from Wednesday? No. Or Tuesday? No, that didn't work. None of it worked. But the market is one time framing higher. It's telling you, keep your hand away from the stove, if you will. All right, here's the TPO chart. Too Humble found support on the way up with half back. Nice job. Nice job. So this is with the, well, that was probably the whole day time frame, half back. We could look at splitting this and figuring out where that was, but nice job. You got in. You got in. A market that is this directional, it seems like it tries not to let you in. You're looking for a pullback. You've got your bid in. The market never gets there. Moves away from you further. You put in another bid. It never gets there. It pulls away further. These markets, and that's news you can take advantage of. When the market seems to be trying not to let you in, that's information you can use. So look at our overnight range here, 41.31.50, 41.55.50. The high, not a very strong high. This little anomaly here, there's lots of holes, there's lots of anomalies in this profile. Opening inside these two distribution levels may have a tendency to create repair. What the hell is repair, you ask? Well, there's a lot of weak structure in this move to the upside. The move was emotional. It didn't feel emotional. I don't feel tardy, but I was. So the emotion that's expressed in this profile bears possible support. There is a pure anomaly right down here at 15. There's, a 3 TPO anomaly, a 2 TPO anomaly, 3 TPO anomaly, lots of holes, lots of single TPOs. Those are areas of excess, but they're also visual target areas. Weak high, no spike. So I'm going to try and stay patient today. Right now we're currently above range and above value. Well, we're above value, but in range. I'm not getting a very clear picture of any kind of direction today. It's Friday. My goal is capital preservation today. A couple of good trades this week. Last thing I want to do is wreck it. Be patient. What about crude oil? Crude oil is probably a bit of a wrecker today. All right, so we close the gap. We have the big move down on Wednesday. Yesterday, we consolidate. We consolidate basically in the late spike that was put in on Wednesday. What about volume? Slowed yesterday. We added 18,000 in open interest, and when you see the profile from yesterday, it's going to be very difficult to distinguish who was the aggressor creating that increase in open interest. So this is going to be kind of a hard read. Here's the 30-minute chart. Here's our late spike from Wednesday. Okay, where was the base of that late spike? Let me check right here. The base was 75.63. We haven't been there yet. Weekly kickoff low has been resistant in the overnight session. Look what we did yesterday. All we did was accept lower pricing inside the late spike and below an important inflection level. If we can't get above this, we'll look for the market to possibly continue a move to the downside. So weekly kickoff low here, 75.50 is pivotal. was resistant overnight. What about overnight inventory? Do we have much? No, not much. Nothing to really look for an opportunity with an inventory adjustment. We're in range. We've opened in range. We're pushing towards value. More range-bound activity is what I'm really kind of thinking. And if I'm going to be looking at the extremes for opportunities, I'm going to be looking at weekly kickoff low, 75.50. I'm going to be looking at the overnight low / yesterday's low. Those are where my extremes are. So I'm looking at range-bound to breakout ranges, rules. Range-bound, we fade extremes until there's an acceptance outside of the current balance with which we go with. So if we accept above weekly kickoff low today in the day time frame, maybe there's an upside move. We accept below this low and we spend some time, see some volume there, maybe the market is going to move to the downside. But inside of this, we're using range-bound rules. Normal variation, neutral day. Here's our late spike. We haven't even truly tested the base of the late spike since it was put in on Wednesday. It'll take a look at the NASDAQ now. What a move. What a high. Weekly kickoff high. I think it went 3 points. 13,330's weekly kickoff high. I think it went to 13,333. Remember, everything's a zone. We added 15,000 in open interest yesterday in the NASDAQ. Volume, again, wasn't all that impressive, but that doesn't scare me because volume on the upside in the equities usually isn't that huge. But this was a big move. It also broke a pattern, bull flag pattern. It's been on that 30-minute chart since it began, and it broke out yesterday before the open, and buyers came in, and we just kept the market going. The S&P added 12,000 in open interest. The NASDAQ added 15,000 in open interest. There's a lot more teeth to the upside here in the NASDAQ than there was in the S&Ps. But where did we go? We remain range-bound. Range-bound. Here's the 30. Gap. We closed the gap, I believe, to the tick, or left one little tick there. No acceptance on a gap open. We go with, well, we got acceptance higher. We never got back even into the range from yesterday. We looked to go long, so we went long. There's our high. What do you say about this? You just got to look at the TPO chart. Lots of holes, lots of weak structure. We're going to need a whole bunch of new buyers if we're going to keep this move going. Are we going to see that today? FOMC on Wednesday? May Day on Monday? Or are we going to kind of come back and repair some of these holes here? I wish I could tell you. I wish I could. All right, gold. Still range-bound. Market state break into range-bound activity. This is doing a lot to even out inventory. We lost 3,900 in inventory yesterday off this weekly kickoff low. This weekly kickoff low has sure been tested a lot. When are we going to exhaust the buyers, or are we down there? So we're still looking at balance to breakout rules. We fade the extremes. We accept outside the balance. We go with it. Here's the 30. Here's that test down to weekly kickoff low yesterday. No acceptance. Market comes back. Actually, closes pretty well. 19.99. Let's party like it's 1999. And we're in range, and we're in balance, and we are in value, and we are still in balance, and we are still short time frame controlled. Short time frame controlled. This trend line was kind of interesting this morning because it was showing a sign of resistance. Now we're above it. Is it going to remain positive? Is it going to remain supportive? Here's the TPO chart. B-shaped, long liquidation. We lost open interest yesterday. That's supported. Normal variation extreme, excess low. In range, in value. Man, stay patient. How about the euro? So finally, I think we're seeing a market state break, but through attrition instead of aggression. I mean, the market is really range bound here. Day 4 in range. We had a nice look earlier in the session at the low of the area of balance. It was rejected. Now we're kind of looking at weekly kickoff high as a possible opportunity for us. Yesterday, we only added 600 in open interest. It's as though nobody cared. And this is a very important inflection level. Folks are just kind of waiting to see what's going to happen here, I guess. It's the 4th day in range, and again, watch the extremes. Balance to breakout rules. Here's the 30. So here's our lower extreme of balance, rejecting, back into range, to value. We do have a value area special situation playing out possibly here. This is kind of questionable if you want to do this because range isn't all that great inside value from yesterday, but we opened outside of range and value. We showing rejection of lower pricing. This may just be an inventory adjustment because we do have some pretty deep inventory to the short side, short time frame traders. We find acceptance inside of value after opening outside of range. There's a good probability that that price will reach the other extreme of value at some point during that session. This is a tricky play, though. This could absolutely only be an inventory adjustment, and our inventory from last night began up here through value to even inventory. We're going to have to come back near settlement, but it could take, we don't know, all day. Here's the TPO chart. So B-shaped, long liquidation, not really supported by open interest. But we opened below, back in range, back in value. I'm not even thinking that this value area special situation play is worth it. It's such a small range. What about the 10-year, which has been largely short time frame controlled? We added 15,000 on this push to the downside yesterday. Not a big number for the 10-year. Price relatively centrally located here inside the area of balance. Short time frame control. Longer time frame traders positioning and hedging for Wednesday. Take a look at the 30. Alrighty, so overnight inventory is long. It is continuing to see buyers coming into this market. May have been somewhat of an inventory adjustment down to here. So I think the long inventory adjustment maybe kind of got out and trying to get back in now. Who knows? But we were inside value, inside range. We kind of took a look down here at on the 730 bar near value low. And remember, when the market is in short time frame control, short time frame levels have a tendency to be respected. The problem is there's so many of them, which one is going to be respected? Here's the TPO chart from yesterday. So long liquidation, not supported by an increase in open interest. So we probably got some shorts trapped down here by the increase in open interest, but again, it wasn't a very big increase in open interest. So we take the the point of control as a potential opportunity? Do we look at the high from yesterday as a potential opportunity? Do we look at point of control above that as a potential opportunity? We've got a weak high up here. We closed the gap here yesterday. A lot of questions, I guess, a lot of cognitive dissonance in these markets today, at least for me. So here's the natural gas. Wow, we got a nice move up to weekly kickoff high. But again, it's short time frame controlled. We're in range and in value. Weekly kickoff high would be a really nice opportunity for us to remain in short time frame control. Acceptance above it, longer time frame buyers would be needed to continue a move. We added 600 yesterday in open interest. Not a big day. Volume was pretty low. Look at the volume today. We're almost there already. What happened here? Jeez. So if we were going to be looking at balance rules, we would have probably been looking for an opportunity to buy along these lows. Would have been a nice opportunity. And this happened before the open even. Right up to weekly kickoff high. Resistance coming back. We'll take this gap out now. I mean, this may be... Look at all the stuff we took out on this pop. We had a gap, we had a naked point of control, another one, and a weekly kickoff high. This was a sweep to go check those visual levels. Visual levels. So, it is Casual Friday. Gonna see if I can't make a little money early today and call it a day. But if you've had a good week, make sure you finish the week a plus player. Nothing more frustrating than having a good week and then blowing it all on a Friday. The S&Ps are looking like they are going to have their second down week in a row unless we get a nice little rally out of this. The Dow is looking the same way. The weekly chart on the Dow and the S&Ps look very similar. The weekly chart on the NASDAQ, not so much. This would be, well, this week it looks like it's going to be a higher close. We've got to break pretty hard just to close this week lower. Last week was a down week. The day before was an up week, but kind of a dojo. A down week the day before, and then 3 up weeks prior to that. So we'll have to see what happens here. Again, I'm not going to ruin my week, and I'm not going to ruin my day. So let's take our deep breath. I've yammered long enough and appreciate everybody's time. And stay humble, grateful, creative, and centered in your trading. Chart language. How do you know anything about me as a trader? I appreciate you, but I've been at this for 31 years. Have a great trading day, everyone. Love you all. Be kind to yourself. Be kind to others. Say a prayer for peace, please. And we'll see you on Monday morning.